Y.
Very
So
nice.
Le's
Very nice.
WY, and then whatever you want after.
Very nice. The whole interview was going great until you flubbed your
I don't.
grade
I'm
history,
dyslexic. I can't tell.
Hello, my name is Shayne Ruffing. I'm the Managing Director of Integrated Wealth Care, and I want to welcome you to Around the Table, where we discuss unique and innovative financial perspectives. Today, I'd like to welcome my guest, Steve Harrington. Steve is the Managing Director of the Carolina Experience Fund, a fairly unique real estate investment opportunity that we're going to talk through and see what we can come up with.
Thanks for having me.
Absolutely. Obviously, you're not from Kansas.
No.
By your voice. Tell us a little bit about yourself.
Yeah, so I am from Wales in the UK. I came to North Carolina in 2009, and I've been primarily in residential and niche commercial development. Just been building this program over the last couple of years, and the Carolina Experience is coming into full fruition right now.
I think real estate as an investment opportunity is pretty interesting and intriguing. We look at real estate as a negatively correlated sort of alternative investment class. We traditionally think about real estate as a building, a piece of property, a portfolio of properties. And the reason we might invest in that, as you well know, is that as the traditional traded equity capital markets move up and down, the value of real estate is somewhat dependent on what anyone is willing to buy or sell. It's a balance sheet asset that performs differently than a lot of the markets. There are also some interesting aspects of real estate, certainly, that you and your partners have developed a fairly unique fund structure that is a real estate investment, but it's a little bit different. You want to talk about that for a second?
Where our fund is focused is on short-term rentals. You know, think of Airbnb, VRBO, purchasing properties in the Carolinas and creating short-term rentals. And it's a very new and popular asset class, but it's one that's growing rapidly. Airbnb, for example, they're bigger than the 4 biggest hotel chains in the world already.
Interesting.
Yeah.
And so by being in short-term rentals, doesn't that introduce a little bit of volatility in the pricing there?
Well, no different than hotels. You know,
Okay.
people have been doing hotels for hundreds of
course.
years, looking for places to stay. And, when you look at trends for travel with especially millennials now, no, they're not looking for that hotel experience. They're looking for a place that has a living room, dining room, a kitchen. They can have family members. We have hot tubs on decks with cool bars and TVs. So, if you want to enjoy an experience weekend with friends, you can have it in that space versus having 3 or 4 different hotel rooms.
Sure, and we're filming this obviously in mid-2021, coming out of the sort of the COVID experience over the last year. How has that impacted short-term rental property? Positively, negatively?
Extremely positively. I think people are now looking to travel locally. I think the idea of putting the kids on a plane and traveling to Spain and potentially having to isolate for 10 days or getting stuck in a country.
Why Carolina?
I mean, what a great state. I mean, like I said, we have mountains, we have beach, we have lakes, we have great cities that are all accessible within pretty reasonable time scale. I mean, you can go from mountains to coast in about 6 hours and everything in between.
So how would you differentiate, I guess, the opportunity to invest in the Carolina Experience Fund from a traditional pooled real estate or even direct real estate structure?
What's really different about the Carolina Experience Fund as a real estate asset class is we're not just building on the property, we're building on the experience.
Okay.
One of the key things is having good locations where people can park their car and they can walk and enjoy the entire town.
So that's interesting because in a commercial real estate portfolio, you would look at a property based on occupancy rates and tenants and rent roll and all these financial metrics. You're really looking at it, sounds like, from a different perspective, from the perspective of what is the experience of the property or being in that particular area. Is that correct?
Yeah, I mean, we definitely have some key metrics that we track, for like occupancy and
So you can
average
quantify experience.
Yeah. We're looking at those metrics to see, what occupancy do we have in the building, what's our rate, how are we competitive, and we can get into some of the AI and data collection software we have, how we control and use that for operations. We're finding that people want to go and enjoy an experience. So, hiking, kayaking, vineyards, breweries, all these different experiences that are connected to where they stay.
So give me an example of what are some of the properties that you're either that are either in the fund or are on the docket for acquisition.
Yeah, so we have an asset that's working in Blowing Rock. And then we're in Elkin, North Carolina. We just got an asset there that, there's 15 vineyards within 20 minutes
Nice.
of Elkin. It's an hour and a half outside of Charlotte. So, and especially where people are starting to get this work from anywhere attitude coming out of COVID, you can leave on a Wednesday, do some work Wednesday, Thursday, Friday, and then enjoy the weekend.
Nice. And so from an investment perspective, tell me a little bit about what that would look like if I'm an investor and I'm interested in investing in the fund. What should I expect to get out of that? How is that structured?
Yeah, so from a financial standpoint, we have a targeted 18% levied return over a 6-year period. And then also we have some great benefits for investors. So one thing that's great about real estate as an investment is it's something you can touch and feel.
Traditionally, when we're looking at investment opportunities in real estate, we would look for, it's not liquid, there's no money in, money out immediately, but we would look for probably a stable asset value, carry value on the balance sheet. We may be looking for income production over the course of the hold or the investment period, and then ultimately we would ideally want some upside appreciation. Is that the same general premise?
Exactly the same, yeah. With cash flow, the people staying are the people renting essentially the space, but they're renting on a nightly basis. So we have our cash flows, we'll have our distributions done monthly or yearly.
So if I'm an investor, I should expect to be in this for 6 years.
Yes.
Park the money, step away for the next 6 years.
Yes. enjoy the stays and enjoy the experiences.
Well, and so that's an interesting point. So if I'm an investor in this fund, in addition to the financial return that I'm looking for, there's some sort of vicarious participation benefits. Is that accurate?
Yeah, that's correct. So you, as an investor, depending on what your financial investment is, you get nights at the property. And one of the great things about the assets that we're bringing on, we're not in overly populated, highly dense areas. Think of just Asheville. When we're in the mountains, we're in Blowing Rock, North Carolina. We're in Elkin. We're enjoying the breweries, the vineyards, and the really unique, cool, small mountain American towns. We want people to be able to tap into the experiences in these towns. From a financial standpoint, too, we can find buildings that we can develop at a much better rate, much better cost, and get better returns because we don't have to go pay high prices in the Asheville market. We can go into smaller markets and we can pull people from those bigger areas into these really high amenity areas.
Okay. So sort of sum total, there's an opportunity to invest in a portfolio of real estate holdings.
Yeah.
They're fairly unique properties. They're experiential properties in terms of being on the coast, being in the mountains, being in places that people would like to go.
Yeah.
From an investment standpoint, there's potentially some income generation out of this. And then as an investor, there's the ability to participate and actually stay in some of these properties, I'm assuming based on availability and some other things.
Yeah.
Otherwise it would eat into the returns, right?
We have some blackout times on peak times because we want to make money, right? And we look at key metrics. So we want to look at, okay, like I said, the amenities. What's the walk score? What's the accessibility? What's the adjoining properties? Look at all these factors that we can build into an algorithm so we can say, hey, this area, this town scores a 95%.
Right.
Let's go find an asset in it.
Okay. And then I would assume that also gives you the ability to kind of optimize the pricing based on what people are paying and what the experience effect is, right?
Exactly. Yeah. On peaks, we don't want to miss out. On downturns, we want to make sure we're competitive. The structure of the fund is done in a way where the sponsors, myself, my partners, are highly incentivized to get investors' money back quickly. And that's why we're looking at these different kind of towns that we can get a good return because we can pay a lower entry price for the property, we can develop it well, and then we can get exposure from Airbnb and other properties to drive people to it.
Nice, very nice.
So that's one of the key things.
That's excellent. So it's a portfolio of real estate.
12 to 15 properties.
Okay, 12 to 15 properties is the target. Invested in unique experiential real estate that is fully furnished, has full amenities for the rentors, has some traditional characteristics of real estate investment being illiquid, potential cash flow, potential upside when the portfolio liquidates, and an added benefit of sort of the Instagram effect. I can go stay in these cool places, and I can post it on my social media profile and show everyone how cool I am.
Yeah, exactly.
It sounds like a really unique opportunity. If people are interested in learning more about this, what would you suggest?
I would say reach out to our capital market associate. Okay. They can put whoever's interested, in touch with the right person.
Okay, and I know we talked about it earlier, but you're from Wales.
Yes.
Obviously. My understanding is that there's one monarch that stands out in the country of Wales.
That's true.
Are you familiar with this individual?
Yes, I am. Yeah,
And what is it? I can't pronounce it. What's his name?
Llewellyn the Great.
And just for the audience, how do you spell that?
I have no idea. LL, lots of L's, EW, Y's.
Very nice.
LE's,
Very nice.
WY, and then whatever you want afterwards.
Very nice. The whole interview was going great until you flubbed your
I'm dyslexic. I can't tell.
Nice try. Steve, thank you very much.
Great.
Sounds like a great opportunity.
Yeah.
Every success to you.
Thanks.